Ever pondered the secret to picking a prosperous company to invest in on the stock market? One crucial tool to help you make an informed decision is the price-to-book ratio, or as it's often known, the PB ratio. The PB ratio is a financial valuation tool that compares a company's current market price to its book value. To calculate it, simply divide the market price per share by the book value per share. The market price per share is the current price at which the stock is selling on the market. It's a dynamic figure, changing as the market fluctuates. The book value per share, on the other hand, is a more stable figure. It represents the total value of the company's assets that shareholders would theoretically receive if a company were liquidated. Understanding the PB ratio is like having a secret decoder ring to the stock market. A PB ratio less than 1 could indicate that the stock is undervalued or the company is earning less than it's worth. However, a PB ratio greater than 1 might mean that the stock is overpriced or the company is earning more than its assets suggest. But take note, a lower PB ratio doesn't always signify a good investment. The ideal PB ratio can vary depending on the industry. So, before making a decision, compare the PB ratio of the company you're interested in investing in with that of other similar companies in the same industry. For instance, when eyeing companies in the Indian stock market, keep in mind the average PB ratios for the industry you're interested in. If the company's PB ratio is below the industry average, it might represent a good investment opportunity. To wrap it up, the PB ratio is a useful tool to assess the financial health of a company and its potential as an investment. It compares the market price per share to the book value per share and can help identify overvalued or undervalued stocks. However, it should not be the only factor considered when making an investment decision. Always compare the PB ratio with other companies in the same industry, and remember, a lower PB ratio isn't always better. It's the understanding of the PB ratio in context that gives you an edge in the stock market. So, the next time you find yourself wondering which company to invest in, remember to consider the PB ratio. It might just be the secret weapon you need to make a wise investment decision.